Well, welcome everyone. We're going to run through all the updates that are in place for this year, with a caveat, if you will, a warning that ultimately these can change. And the reason that we do two of these broadcasts, one in November and then one in January, is there are occasions when some of these things that we're going to cover with you will change. So please don't hesitate to sign up for the one that we're going to be doing on January 20th, I believe, in case there are some things that might be updated between now and then. But as of today, here are the IRS and industry updates for the upcoming tax year 2022. So what are we going to cover today? First of all, in the agenda, we're going to cover the changes themselves, the tax law changes that are in effect for this upcoming tax season. We're also going to cover annual updates. And when we talk about annual updates, there are some things that are in place that literally change every single year simply because the numbers change. As an example, what your standard deductions are and those types of things. And so we're going to go ahead and take a few minutes and cover those. We'll talk about the ramifications to the Inflation Reduction Act, since that is now in play. And we're going to finish up with additional items of note. This presentation should take 20 to 25 minutes and then have an opportunity for you folks to ask some questions at the end if there's anything that you need further clarification on. So let's go ahead and get started. We'll start with 2022 tax law changes. And we'll start with the child tax credit, which is found on Schedule 8812. With regard to that, the credit reverts back to the tax year 2020 rules. So this is important to note. This goes back a little ways, and you know what? This is what was in place before some of the changes that took place, obviously, for the last couple of years with the pandemic. The credit will be $2,000 for each qualifying child, and $1,500, which is eligible to be refundable credit. Also, the credit is available for children under the age of 17 as of the end of the year. Taxpayers must have earned over $2,500 to be eligible for the refundable portion of the credit, additional child tax credit that being. And finally, it's important to note all qualifying children must have a valid Social Security number. Next up, we want to cover the Child Independent Care Credit, which is found on Schedule 2441. With regard to that, this will revert back to the 2020 rules and is now non-refundable. What that means is the maximum amount of qualifying expenses will be as follows. $3,000 for one child with a maximum credit of $1,050, and $6,000 for two or more children with a maximum credit of $2,100. Also, the maximum credit percentage is 35% for the taxpayers with AGI, adjusted gross incomes, of $15,000 or less. With regard to EITC for taxpayers without children, please note this will revert to the 2020 rules as well. And that means the taxpayers must be at least 25 and under 65 years of age at the end of 2022, and the taxpayer's AGI cannot be greater than $16,480 or $22,610 for married filing jointly. Next up, what we're going to do is cover other changes and reminders, and that includes the taxpayer can no longer treat Mortgage A insurance premiums as qualified mortgage interest on their Schedule A's. On top of that, the taxpayer can no longer take a charitable contribution of $300 unless they itemize. Anything over that, itemization is required. And finally, business meals will now be 100% deductible for the tax year 2022. In a nutshell, those are the 2022 tax law changes that are going to be most relevant for most of the returns that you're going to be doing. The next piece that we want to cover will be the annual updates. And we'll start with mileage rates. That for the upcoming year, please note that for business, it'll be 58.5 cents for January through June, and then 62.5 cents July through December. Obviously, this was because of the increase of gas that occurred over the course of the year. So again, for business expenses, 58.5 for the first half of the year, 62.5 for the second half of the year. With regard to medical or moving, it'll be 18 cents for January through June, and it'll be 22 cents July through December. And finally, for charitable contributions, it'll be remain at 14 cents. Next up, the standard deduction for tax year 2022 will bump up again, just as it does every year. It'll now be $12,950 for single and married filing separately. With regard to it'll be $25,900 for married filing joint or qualifying widow or widowers. And finally, $19,400 for head of household. Obviously, these are important figures since most people do take standard deductions, and they have changed since last year. The next thing we want to cover is change to the virtual currency question that's found on the Form 1040. You know, this seems to be changing every single year, and it's important to know that it's now going to read as follows. On the Form 1040, the question pertaining to virtual currency will now read as follows. At any time in 2022, did you A, receive as a reward, award, or compensation, or B, sell, exchange, gift, or otherwise dispose of a digital asset or financial interest in a digital asset? That's what the question's now going to read. And what does that really mean? Well, what it means is the IRS, from an IRS perspective, is all the different virtual currencies are considered digital assets, and these will include the following: virtual currency, non-fungible tokens, or what we refer to as NFTs, tokenized assets, stable coins, security tokens, and any other assets that are digital and have value, established ownership, and is discoverable. So from the IRS perspective, this is a pretty big web right here that this now incorporates. So please take note of this when you're answering this question. So continuing on with regard to that, in general, and I'm just giving you a general perspective here, the digital asset question should be answered yes if the following for the taxpayer. If he or she received digital assets, usually as a virtual currency, as a payment for goods or services provided, or they received digital assets as a result of a reward or an award. In that particular instance, you're going to make sure that you're answering yes to that question that's found on the 1040. In general, the digital asset question should be answered no if the taxpayer either is holding a digital asset in an account or wallet, or is transferring a digital asset from one wallet or an account to another wallet or account owned or controlled by the taxpayer. And just for reference sake, I'm going to go ahead and pop into the program real quick. Here's the upcoming year. And you'll notice it's found right on the 1040 right here. Here's your question right here. And that's how it has changed for this upcoming year. Please remember, use those general guidelines when answering yes or no. The IRS does look for an answer on every single tax return now. Next up, change to educator expenses deduction. This is kind of important, and it only stands to reason that our educators are paying more into supporting their classrooms than ever. The different supplies that are purchased. An educator can now claim up to $300 for classroom-related expenses without any kind of itemization. Please note, for tax year 2021, it was $250, so it has gone up $50. And if audited, correlating receipts may be required. I can assure you, if somebody's taking the stand at $300 right here, they are not going to be audited for that. But I do have to include that in this presentation. Note then also, it's found in Form 1040. The deduction is entered on Schedule 1, Part 2, and is found on line 11. Also note, if you're married filing jointly and they're both of the individuals are educators, it's a $600 deduction that can be taken, which is up from $500 last year. So those are the examples of things that just change. The numbers change every single year, and so we wanted to make sure you were apprised of what the current numbers are, whether it be the standard deductions or itemization credits, credits that educators can take without itemization. Okay. Next up, we want to talk about the ramifications of the Inflation Reduction Act, which took place this last year. A couple of things of note. The Energy Efficient Home Credit, which is found on Form 5695, the following is now in place. Formerly, it was the Non-Business Energy Credit, so those are now synonymous. And with regard to the credit is available for tax years 2022 through 2032, so it'll be for the next 10 years. The credit rate is 30%, and the lifetime cap is replaced with a $1,200 annual maximum, or $2,000 if it's pertaining to heat pumps. Also, there's an interim credit limits, and they are as follows. First of all, $600 for windows, $500 for doors, and $600 for other qualified energy properties. Next up, oh, I'm sorry, I do need to include credits available for any dwelling owned by the taxpayer, not just the main residence, but any that's owned by the taxpayer. Next up, with regard to plug-in electric drive vehicle credits, that's found on Form 8636. Please note the new clean vehicle credit for qualifying electric and fuel cell vehicles does not go into effect until next year. So even though this was part of the laws that were passed as far as the Inflation Reduction Act, this will not be in place until next year. For tax year 2022, which is the one that you'll be working on this year, the rules that were in effect before the Inflation Reduction Act for qualifying electric vehicles will still apply. And this includes the manufacturing caps on vehicles sold. Also note, the only change for tax year 2022 is that all qualifying electric vehicles purchased after August the 16th must have had final assembly done in North America. That's kind of important to note if something was purchased in the latter half of the year. Continuing on, the alternative fuel vehicle refueling property credit. That's a mouthful right there, but is found on Form 8911. Please note the credit's been extended from 2022 to 2032. Same as before, or excuse me, pertaining to the last thing that we talked about. And it's for residential property. The credit is 30% of the installation cost of any qualified refueling property, such as a recharging station. So if somebody's putting a recharging station into their house, this is what this is pertaining to, and the maximum credit will be $1,000. Next up, what we want to cover is additional items of note. And some of these things are quite important, so please, let's hang in there for a couple more minutes because some of these things I think that you're going to find very interesting. First of all, with regards to the 1099-Ks, this is really interesting. More individuals receive 1099-Ks this filing season than they have in the past. And the reason why is the reporting threshold for third-party networks has been reduced down to $600. So at that particular point, they're going to have to begin sending out 1099-Ks. The 1099-K income that must be reported on return will include the amounts from selling goods and or providing services, as well as income received from renting property. Other income amounts reported on the 1099-K may or may not have to be reported as income on an individual's return. Now that sounds pretty ambiguous right there, and the reason why I'm saying that is it truly is. We're all waiting for the IRS to provide further guidance. And so one of the things you'll want to do is take a look at IRS.gov every once in a while if you have situations with regard to your 1099-Ks for further instruction. Also, this is something we believe we'll have more information about when we do the webinar in January timeframe. Also, a reminder on the premium tax credit. For tax years 2022 through 2025, so for the next 3 tax seasons, actually 4 with 2025, the maximum an individual must contribute to the insurance is as follows. It's been reduced for individuals for all income levels, and the maximum contribution percentage ranges from 0 to 8.5%. That means the phase out for households above 40% of the federal poverty line has been eliminated. We get a lot of questions with regard to data security plans. And these we wanted to make sure we were covering simply because so many people are asking about this. There is a requirement out there now that the federal law is saying that tax preparers have a responsibility to create and implement a data security plan. So this doesn't mean just necessarily your big offices, but everyone has a responsibility to have one of these. So the Written Information Security Plan, or what's called the WISC, was created as a template to help folks out, or a guideline, if you will. The Security Summit partners created a sample security plan to help preparers, especially smaller practices out there, create a plan to help protect their data and information. This is known as Publication 5708, and you should reference this if you have not put a security plan in place. Again, we seem to get a lot of questions with regard to just because people want to make sure they're adhering to the requirements. Look for the following for further information. Beyond the publication itself, you can go ahead into the IRS.gov website and you can look up creating a written security plan, or to the data theft information for tax professionals. Both those articles within the IRS website will provide you with further information. Just please note that this is something that is being required from all tax professionals, is to have a security plan in place. Additional items of note, I want to finish with 2 more. The filing deadline for the individual tax return for this upcoming year will be actually the 18th of April, and that's due to the Emancipation Day holiday in Washington, D.C. So it'll be Tuesday, the 18th of April. And finally, one of the things that we oftentimes get questions are, and this is a simple reminder with regard to IP PINs. Please note that all taxpayers are eligible to receive an IP PIN if they so choose. Why is there value in that? When an IP PIN is included on the return, it does help the IRS confirm that the return is truly the taxpayer's. That's where the benefit lies in case there's any kind of question with regard to that. Now, for any taxpayer with incomes below $72,000, they can obtain an IP PIN online by using the Get an IP PIN tool on the IRS.gov website. If the income is over $72,000, what will mean is all of the taxpayers can obtain the same IP PIN by completing and mailing IRS Form 15227. Now, that brings me to the end of all the things that we wanted to make sure that we covered, and we're right at 20 minutes. That's just what I thought we'd get at. So again, we've covered the different things as far as, updates for this upcoming year, as well as some of the numbers that have changed, so just kind of some of the annual changes. We talked about the ramifications to the Inflation Act and other items.